Dan, a few things not
Hi,
working in Intel's favor here. The Q3 forecast, not great. Current sales falling slightly short, and that server chip business up, but down year over year. What is your headline takeaway?
Well, Emily, I'm a little more optimistic on Intel than I think the street is. I mean, they beat in their client computing group. They came in at 10.1 billion. I think the street was about 9.9. They also beat in their data center group. That was at 5.8 billion, 5.9. They did almost 6.5 billion in revenues. I think what we have to do, Emily, is kind of take a step back and just realize that Intel's in transition right now, right? They got a lot of things on their table. They're trying to get into the foundry business. They've had some production delays with some of their 10 nanometer high-end chips. One that comes to mind is the Sapphire Rapids chip, which has been delayed into the second quarter of next year. So they've been a little bit slow in terms of bringing out chips in the data center area. And I think that's why the street is kind of like, oh, well, your guidance going into the third quarter wasn't what we expected. But I still think that Intel is positioned well going forward. I think you got to give them a little bit more time to kind of ramp up and really take advantage of some good strength that I'm expecting coming out of the infrastructure as a service area, which is the data center space.
So look, Pat Gelsinger, super ambitious, and he has laid out a big vision. How optimistic are you that he can actually deliver on that vision?
Well, I hope so, Emily. You're right. I mean, the 2 new plants in Arizona, you've got obviously the possibility of an acquisition in that space with Global Foundries. I mean, they're going to be in there with, Taiwan Semiconductor and Samsung in that huge space. And, you have the Department of Defense, you have a lot of companies here in the U.S. that are saying, look, Intel, if you're really serious and you're going to build foundries here in the U.S., we'll use you to build out our chips. So it's a big plan, Emily, but if they can pull it off, it would be unbelievable for them, along with this return in growth that I'm expecting in data centers. So a lot on the plate, no doubt, for Intel right now, but they're at a crossroad.
Indeed. And also the industry is at a crossroad. Obviously, we're continuing to deal with this chip shortage. It's not going to be over at any one time because there's all different kinds of chips and they all have different outlooks. Is there anything you're seeing in the numbers that give you more clues about when this shortage more broadly will let up?
Well, you're right, Emily. In the beginning of the year, I thought it would let up by now. I thought it'd be mid-2021, but now I've kind of pushed that out in the first and second quarter of 2022. And you're right, there's so many sectors within chips, it's really unfair to say there's just a shortage. Obviously, the automotive sector is the one that's having the most difficulties, the one with the biggest delays. And then you swing over into other sectors that aren't quite as bad in the chip space. So it's kind of on a company by company, sector by sector basis. But if we were to say from an aggregate, based on my estimates, I've got things finally coming into full throttle, hopefully by the second quarter of 2022, and hopefully we won't be hearing about these shortages anymore.
All right, well, we're going to be speaking with Intel CEO Pat Gelsinger tomorrow, so we'll try to get some answers directly from him. Meantime, I do want to turn to Twitter, where the numbers look good. What's your headline takeaway on these results? Last quarter for Twitter was more bumpy.
Emily, it was a great quarter for Twitter. They came in 1.05 billion in advertising revenues. That was an 87% increase from last year. That was above my estimate at 993 million. They came in with daily average users that were 206 million. The estimate was 205. Last quarter, they did 199 million, and that's been a real sticking point for them. They've had trouble really growing their daily average users. Now, you mentioned before I came on that Snap came in with 293 million daily average users. The estimate was about 291 million. Just to give you a forward look at Facebook, for their second quarter, they're looking to do 1.9 billion daily average users. So Twitter had a very good number. They beat on my estimate for advertising revenues. They beat on daily average users. And it looks like to me, Emily, they're finally starting to be a little bit more successful in targeting small businesses. They're getting into video. They're trying to increase the amount of time that people spend on their site, because that all leads to more advertising dollars and more revenues for them going forward. So, but all in all, Emily, the Twitter report looked very strong.
I'm curious what your thoughts are on Twitter Spaces. Clubhouse, came out swinging, but the numbers there haven't been looking good. Twitter Spaces looking more promising, but still not getting the kind of traction that I'm sure Twitter would like to see. And I wonder, do you think that's a big potential growth area for them or not?
I think it is. I mean, they've been trying a lot of new things, Emily. They actually, a year ago, were going to get into doing sports, telecasting sporting events. They were trying to sign contracts with different leagues. So they've done a lot of things to try to get not only that daily average user up, but to increase the amount of time that people are on there. The average amount of time that people are on Facebook is about 30 minutes per use. I think Twitter was around 1 or 2 minutes. So this new product that you're talking about, this new service, anything they can do to get people to spend more time on it, that's really going to drive those advertising revenues. But I think you're right. I think the jury is still out right now in regards to this to see if it'll be successful for them.
Now, we are getting some headlines out of my colleague Ian King's interview with Pat Gelsinger on the phone. Gelsinger is saying he believes the chip shortages will bottom out in the second half of the year, but that the industry will take 1 to 2 years to fully catch up. What do you make of that?
Wow. Well, that's a lot. He knows better than I do. He's in the trenches. I was a little more optimistic than that we might get there by the second quarter of 2022. Again, Emily, it's really sector specific. I mean, the auto industry is probably going to be the last one to really get there, but I think other sectors, let's say memory and other groups, PC chips, you've got chips that go into artificial intelligence, you've got all these different sectors. I think that they might come along a little bit quicker, but obviously, Emily, he's going to know more about how those chip ordering patterns are coming and when they're able to deliver and how those backlogs are either contracting or restricting. So I would go with his forecast.
Dan, you're looking at Microsoft. Obviously, we know the company soaring past that $2 trillion market cap. Investors very excited about Microsoft. What are you going to be watching?
Well, again, Emily, with Microsoft, the key figures are going to be the Azure, which is their infrastructure as a software service, data center product. I'm looking for that to grow about 50%. Also, Intelligent Cloud, which is that cloud group that everybody kind of focuses on, looking for strong growth in those areas. And then there's always things like gaming and other areas of their business. One thing that could potentially be a surprise is their overall operating system business, Windows-based, that goes on their PCs. We've had good strength in terms of IDC data showing that unit volume growth in the PC space has been very strong. So wouldn't be surprised if that trickled in like it did on the last quarter. So I would expect, Emily, good numbers coming out of Microsoft as we go into next week.
Meantime, these cyber attacks seem to keep nipping at Microsoft's heels. And of course, there are thousands of victims of these attacks around the world. The U.S. has blamed China for the attack that impacted Microsoft, China denying this. And I spoke to Satya Nadella last week about this raft of issues, and he called it a new pandemic. Take a listen to what he had to say.
Somebody described this to me like, while we have a pandemic, we have another real pandemic, which is a cyber. And that's going to be there with us. But at the same time, I think what is really now much more, I think, in the consciousness of people is the level of attacks for sure have increased, but the need for our response to be top-notch has also increased.
Dan, Microsoft buying Risk IQ in part to help them, build up their own defenses and help protect their customers. But how big a risk is this cyber issue to Microsoft?
Well, I think it's a big issue, Emily, just because Microsoft is so dominant, right, in terms of the desktop space or in so many areas that we interface with on a daily basis. So it's interesting that the CEO would call it a pandemic type situation and elevate it to that level. But I mean, I definitely saw the news coming out on that. I don't know, quite frankly, if that's really going to directly impact this upcoming earnings report next week, but it's obviously something that we have to keep a careful eye on. Hopefully it won't lead to anything that's excessively damaged, where there's some sort of privacy issue getting into information like we saw with Facebook. So we'll just have to kind of monitor this situation, and hopefully, like you said, they'll be able to put up enough firewalls and safeguards to prevent it from being a big issue going forward.
Right. Let's talk about Facebook. You're also following that. Obviously, Facebook has been dealing with a number of reputational issues. But of course, the ad business, user growth continues to happen despite the bad press. What are you expecting there?
Well, Emily, I mean, I kind of think of like Facebook is like the Weebles. You keep knocking them down and they keep getting back up. That was an old advertising slogan for children's toys back in the 70s. But you're right. I mean, I mentioned earlier that I was expecting them to do over 1.9 billion in terms of daily average users. I would expect them to be north of 55 to 60% in year-over-year ad growth. I think the fact that Twitter came in with an 87% jump on this quarter in terms of advertising revenue jump, I expect those numbers to fold into not only Facebook, but also Google coming out next week. So I would expect big year-over-year growth rates in advertising for both Facebook and Google as we go into next week's figures.